Welcome to Power Charting. I'm your host, Bruce Frazier. Greetings to my Wyckoffian sisters and brothers. I've been off for a few weeks, in winter reruns, and it's great to be back. And also, friends of Wyckoffians, I'm so glad you're here also. With me today is Johni Scan. Dr. Scan, how are you?
I'm wonderful, Professor. And you?
I'm great. I'm so glad to be here. And we have a great show for you today. And I really appreciate Johnny's participation, his observations and his views. And hopefully if we have time at the end, we'll hear a little bit more about some of the things he's working on here as we go forward. But Johnny, tell me about your most recent, Your Daily 5. You just published one this week.
We did do a daily 5 this week, and we covered the rank by command. Incredibly powerful feature of the scan engine. Very, very interesting opportunities using that, and some good comments from some of the techie folks out there that really like to delve into the scanning engine.
Fantastic. Well, you've brought me kicking and screaming into the scanning world, and I take those scans and I put them in to my scan engine, and also I fool around with them, and now I'm making some of my own. I'll never be at the level you're at, but the great part for the Wyckoffian community is that you always have an eye towards the Wyckoff method when you create these scans, and we're just going to do a bunch of them this year.
Absolutely.
Well, appreciate that a lot. And today we are going to talk about trouble brewing on Wall Street. And we're asking the question, is there trouble brewing? Some things have happened since we last met, but we can honestly say that we were looking for the market to stall out and potentially show some signs of distribution characteristics. So let's review that today. So looking at where we're going to go from here, you can see today's agenda is that we're going to do just a very quick review on distribution, and then a look at the current state of Bitcoin. Is the decline over? And then following that, distribution forming. The question is for the S&P, the Nasdaq, the triple Qs, and the Dow Industrials, is distribution forming? We're also going to look at bullish percent. And with the time that we have left, we're going to delve into industry group studies, which I think is incredibly powerful. And Johnny is doing some great work on that. So with that, we had better get started. So this is our chart that was created by Roman of the classic investment / trading cycle. And this is a Wyckoffian view with also some characteristics of Elliott wave, which we don't cover here, but maybe we can get Jeff Kennedy to come back and talk to us more about Elliott wave. Note in the upward stride of the trend that towards the end, the market becomes somewhat excited and goes into an overbought condition over the top of the trend channel. We're going to see real life examples of that today. And then we're going to look at the distribution characteristics that come at the top. And so here, just blowing up that period up there, you can see that there are attributes or elements of the phases of distribution as we go, and how distribution concludes and becomes a markdown phase. Now, the alternative to that is that it's reaccumulation for another move up. And so we always want to keep that in mind. Johnny, any thoughts on this before we move on?
Absolutely. One of the keys when we're scanning and looking for opportunity is when you're scanning for events that are occurring near support, there could be a different character than you anticipate. Could be a spring versus a sign of weakness. Same thing on the resistance side. A UTAD, which is distributional in nature, could also be a breakout with a consolidation backing up action there. So very, very important that the context and all the relevant Wyckoffian factors be considered when you're making those decisions.
Fascinating. Very good, because context is really what these phase characteristics and phase studies are about. I've written about them in my blogs, and also we've done videos on them. Check them out. Okay, thank you, John. And so moving to Bitcoin, here is a look at the trend of Bitcoin off the November peak. Notice the characteristics of distribution that occurred really from this point on. Here's our downward striding trend channel with a supply line over the top and a support line, oversold line underneath. And look at these throw unders here, and with an ultimate throw under, which is a big climactic surge that occurred. Now, one of the tools that we have is we can measure the distribution area with point and figure and see what the potential extent of the move is. And so with that, we see here, counting across this area from November over to the buying climax, we have a count that goes downwards to this 41,500 area. And then also the yellow shaded area represents the count line and the high. And I also took the width of the structure and took the midpoint for which gave us this low count. But look how beautifully it picked up this climax and possibly redistribution and then another climactic action. But this does not tell us that Bitcoin is ready to go up yet. It just tells us that it potentially could be building a cause, and that cause could be either be for another move down or a turn up. John, your thoughts?
Well, P&F analysis to me is so powerful. It's just incredible to be able to project into the future on the extent of a price move. Fantastic. And of course, Professor, you're the master of P&F. How many courses have you taught in P&F?
Well, I don't know, 30 years, 27 years of teaching it in the Wyckoff classes, and then 30 years teaching it in the survey course. So, but more importantly is I had the best teacher. So I've got to give all due credit to Hank Pruden, who is just an incredible teacher of the method and teacher of Wyckoff. And he is the one that I literally sat at the knee of for years before I started teaching and learned this. And then we taught it together for 27 more years in the classroom. It was just such a joy. And so Hank's with us every step of the way on these lessons.
Absolutely.
Thank you for that. Okay, so here we can see the S&P 500 as the first study we're doing. I want to also point out this OBV line. I've been looking at OBV forever. I actually knew Joe Granville quite well, wonderful guy, brilliant technical thinker, and he innovated OBV on balance volume. But Johni Scan actually gave me a new way to look at it. And so I'm very appreciative of that, because he looks at everything from the perspective of how do I scan for this condition? And OBV is a great way to scan for volume. So I want to start by pointing out this preliminary supply that came at the top of the channel. This channel goes well beyond the area that we have on the chart, but then a rush up into a buying climax stops the upward trend, automatic reaction, range bound condition, up thrusting action, and a test here, which is followed by a very deep decline out of the channel below support, which we call a sign of weakness. And so this is where we were as of February 1st. And so you can see that. And Johnny, your thoughts?
Well, I'm glad you referenced OBV because it's a very, very important indicator to help us detect the sub rosa moves that are being made by those in the process of distributing. They're doing things under the radar, but they cannot hide their tracks for all time. So for example, we see the 20-period moving average of the OBV starting to flatten out and acquire a declining slope well before the corresponding price moving average. That's a very subtle sign that something has changed. Doesn't necessarily mean distribution, but it does mean the balance of volume is coming down on the negative side rather than the positive side. And we see potentially distributional character accompanied by higher percentage of negative volume, in essence, with the downsloping OBV line. Very, very important.
Also note here that these red volume bars are really high and expanding off the peak. We call that volume off the high. And you can see that the OBV is making a series of lower highs, which is what John's talking about, while you have an upthrusting action unconfirmed by rising volume. Look at how low the volume is on this last push up, lack of demand. And so that's really important. And then after this little episode, it just cascades down and out of the structure. And so also I'd like to point out, preliminary supply often roughly equals last point of supply. And so this area here, which you can see on our point and figure chart, is roughly equal. And look where we got to. And so as of February 1st, we are touching, these two areas are touching. And then of course, the Facebook news has created some near-term weakness. So I should say meta platforms. But anyway, buying climax, preliminary supply. This is all the same labeling as on the vertical chart. Buying climax, automatic reaction, upthrusting action, test. Notice how the test goes right to the buying climax and then cascades down. So I've only taken the most conservative count here from the high to the buying climax, and it gave us a countdown to 4140. We have not reached that yet, which means it could still be in our future. And then the other part is, we talked about this prior, is that we always have to have an eye towards what could come next. So when we were looking in this area here, we were saying, well, what could happen to give us a larger count? And this preliminary supply point now gives us the visuals to think about a break and then a rally to this level, which means if this continues to decline from here, we can now count this larger area, which would be a very large distribution point and figure count. And so that's the reason we take conservative counts first. I have not even counted all of this structure. There's a few more columns I could add here for lower prices. So let's keep that in mind. Now I want to go to this chart we've looked at in the past, which is this literally is log scaling, percent scaling, point and figure, which we've really innovated the horizontal counting method for that in our little community. And so, and I love sharing this with you. We've done some workshops on it. It is a very special form of counting. This count goes back to the 2011 reaccumulation. So we have these series of stepping stone reaccumulation counts that have done a magnificent job of picking up the climaxes and the preparation phases for the next move. And so here you can see this one picks up this high, this one picks up this area peak, and then this count, which by the way, this count is from the test of the COVID low back to the 2018 December low. Very sharp decline in the market. Look at that, 3% moves down in that one column. And that counted up to this area. And we showed this at the time and said, ooh, watch out. So because look what we have. We have this beautiful striding uptrend and an acceleration here. Look at all these 3% jumps up into the area of the high count of or the count zone. And so now this is what happened. John, what do you think?
Well, once again, the prognostication of the P&F system is just amazing. We're building new count for a new opportunity, possibly to the downside.
That's right. Yes. Very good point, John. Because
extraordinary.
Once you fulfill a count, you've got to build a new count. You know, you exhaust a cause. This is a cause. You exhaust it. Well, you build a new structure. And this turned out to be a rather substantial cyclic decline here, but it built a new structure for a new cause. And so we hopefully, I mean, I like to be a permabull, a mega bull, and that is hopefully this turns out to be another cause for another move up, which we had talked about, or we'll talk about a little bit later about how 2022 could go. And so just keeping that in mind, we have one more chart, and that was, first of all, I want to show this climactic blow off, now range bound, but this is a traditional count using the S&P 500 ETF SPY. And here is the count I just did from the test of the COVID low back to the 2018 December low, which was a very psychological extreme. Taking this count, look what it got us, John. It got us up to this 475, 495 area, exactly touched the 475 on the up thrust. And look what's happened since. It rejected that point and has shown weakness down in a very long column of O's.
Well, that just goes to show you. Sometimes you're throwing darts on these P&F studies, Professor, really.
I like that. I like that. But all I have to say is when I throw darts, people go to the next room. Okay, so this is a 3-box method, 5-point scale. So just so you can see that. And then moving on, now the Dow. The Dow has been really kind of a mixed bag, but I think generally has been the better performing index throughout here because it has the least weakness in the decline. But notice something we talked about early on, and that is look at the volatility. Here's our climax. Climax occurred in May, and then a reaction, a test, a bigger reaction, then a run up into an upthrust of this area, upthrust of resistance, a test, a bigger reaction. The increase of volatility throughout a structure is not a bullish sign. That is a sign of classic distribution, supply being present and showing up and selling off the peaks, which is what the CO does often in their playbook. And so here's another upthrusting action. We draw this trend line across these highs, throw over and overbought, bigger decline, comes very fast, volume expanding, another run up when it touches this uptrending support line, overbought, tests, bigger decline with a sign of weakness, but a better rally back in than in the other areas. So if this is a buying climax or preliminary supply, either way you label it, that could represent resistance. And so here we can see this is a very, very important place on the chart. And John, your thoughts?
Very raises some interesting issues with the stride and the length of the current rally back into the channel or structure, depending on your view of it. So interesting things will happen there because resolution will be key to determining what really we have at this point.
Sure, a failing test here would be really a sign of advanced completion of distribution. And then this becomes a large cause, which we would, for point figure purposes, break up into small bites. And oh, we have a point figure chart. So here's a 60-minute point figure chart with a you can see here with 2 counts, the count of the whole structure, which we just talked about, showed back to May, and then also this smaller count, which just takes this area of the upthrust, the testing of this area with this upthrust, and then here. And this count goes down. We never fulfilled this count yet. So got to support. Notice how support looks better on the point and figure. It could be important. And then turned up, and has turned up nicely from that area. But we really will watch the support area closely for failure. We have a count down here that goes to around 31.7, 31.4. And then don't look at this count. I should block this off because this count, if we go back to May, this count goes down to the area of the COVID low. When I show people this chart, they go, wow, is that how low we were at the COVID low? And so we were in the area of 18.2 to 19.8. And so that is the count area generated by that area right there. Now we can do trend analysis on point and figure, do trend analysis on everything. You know, when your cat starts moving, do trend analysis on the movement of your cat. You know, it's just like, you just develop those skills. And so look at this, overbought and throw over of the overbought line, which comes at the May buying climax, sets the range bound condition from that point on. So if you just drew that trend line, trend channel on your point and figure, you would have had a great tool to tell you that you were going to spend some time in the channel, which we spent going sideways rather than down. And then the rally did not get back up to the overbought condition again, which is a sign of momentum weakness. And now we are down and out. Look at this column of O's breaks the demand line, which is the solid line, breaks it really hard in one set column of O's. And then an attempt to rally, we would like the rally to get back up to the demand line. If it does not, that could be a measure of additional weakness. And then here is our distribution schematic. Notice the commonality: buying climax, up thrust, UTAD and test, UTAD and test, last point of supply, might get another last point of supply, but all the characteristics and the phases are present. So very interesting. The only thing we don't have is a sign of weakness that's really obvious below this lower support line. Okay, we're running out of time. We have a few more minutes. And so John, I really want to show you this chart because it's so darn fascinating. And we've talked about this before, but I think it's like it's a cautionary tale. And that is that here's a trend channel analysis with the supply line drawn over the top. The primary trend line I always draw as the solid line. The oversold or the overbought parallel I draw as a dotted. So you can see that here. So the solid line, notice that how from the middle of 2021 onward, the Dow Industrials has been riding on the top of the supply line in an overbought condition. Let's blow that up. And so John, look at this. And I had said that when we talked about this chart before, that any attempt to come back in again could produce the onset of volatility. And we see that this is the best one because it went sideways, but this is pretty nasty. These were nasty. This was the 2018 December decline. This is the COVID decline. And so you can see that getting into the channel can be a situation that produces the onset of selling. So an attempt in January to go into the channel, look at how beautifully it closed above the supply line. And now here we are in the beginning of February with a very tight little bar, but we got to watch that like a hawk. What do you think, John?
Well, it's been overbought for quite some period of time, and we do have a wide bearish bar testing that overbought condition, and we look back and we do see that the kickoffs on some of the other retracements into the channel were likewise bearish engulfing bars. So the setup is there. It happened in 18 and 19, and then really into 22 after a small failed test. But interesting times ahead, I think.
Now we have more for you, but we're running out of time in our 30-minute segment. But I want to talk about the Nasdaq, the triple Qs, and then I also want to do some industry work, and we'll do it really fast, 10 or so more minutes. So we're going to go into an overtime segment because we have Dr. Scan with us, and we want to take full advantage of that. And so let us sign off officially at this moment and take a break, and then just stay on. If you're on the on-demand version, stay on, and we will be right back. Welcome back to Power Charting. I'm Bruce Fraser, your host. With me is Johni Scan, and we are having a blast here, just going over the indexes, and we're going to finish up that discussion and then move on into a little bit of industry group analysis. And from there, also a look at Meta Platforms, which has turned down rather sharply today, and look to see whether or not it is beginning a decline or ending a decline. So let's leave it at that for now. And so here we're looking, John, at the Triple Q Trust. This is a chart from November 26th. It's a terrific chart because, again, like we had with the S&P percent scaling chart, is a series of reaccumulation structures inside of an uptrend that all do a wonderful job of identifying a rally and a pause and the need for reaccumulation for another run up. Now, at the end here, you can see that there's a throw over of the top, throw over and overbought. And so this, and again, we're drawing trend lines on point and figure. This is a one box method using daily data, 5-point scaling. We're doing this for swing trading purposes. Swing trading being sub-cycle or weeks to months type trends. And you can see here how beautifully this picks up a move and marks the climactic extreme. And then from that, a sharp decline, range bound again, builds a new cause. Notice the series of higher lows in these, which is a classic sign of reaccumulation. And so then a new uptrend ensues. This count is misses this low objective by one box. And then, but you can see the climactic surge, and then it builds a tiny little reaccumulation that confirms the purple one. They confirm each other. Now it throws over at that point. So this is a classic large overbought climactic condition in the Qs, which is the ETF trust that trades the Nasdaq 100 stocks. So with that in mind, and considering that we're doing the, hold on here. Okay, there we go. So we're looking for swing trading counts with this, with a one box method chart like this. So what can we expect to come next? Now, this is as of November 26th, and we showed this chart in Power Charting at the time. And we also show all these and many more charts at Wyckoff market discussions that we do with Rahman. Johni Scan is a frequent guest with scans that he profiles and presents. And we would love to have you come to one of our free sessions. And as a Wyckoffian, you would probably love to be part of our community. So John, your thoughts, because I know that you are a great contributor, but also attend these sessions.
Oh, absolutely. Really, it's a must attend for the Wyckoffian. There's just so many great concepts and analyses that occurs every week. Different themes rotate through the weeks, and we cover materials like what we're seeing here. So throw over and overbought, independent significance in the world of Wyckoff. What we see is the P&F style chart here, but we cover that on the regular charts too. So fascinating.
Thank you, John. Okay, so this is what happened since, John. Look at this. And then I extended these trend lines. And becomes overbought, throws over, climactic, and then this must be corrected, dealt with some kind of a cause building process as occurred prior, comes back in. And as we talked about in the earlier part of the segment, that volatility when you come back into a channel can be extreme. And not only did it come down to the bottom of the channel, but went through it in what is an apparent sign of weakness, especially because it took out these lows here before it rallied back up. And so that's very important. And then note this. This is that important relationship we talked about before, which we saw on the S&P, and that is where preliminary supply equals last point of supply. And that's this point here, which you can see quite well on the point figure chart, in a slight overbought condition above the channel, call that preliminary supply, and that becomes a place where we can expect a failing rally to go to. A truly weak market, this rally won't get there. So just FYI, it's a general rule of thumb. It's not a law, because everything can change in markets, okay? So, but there it is. And so let's go on. John, your thoughts before we move on.
Well, there's another level of significance here. And if you look at your count line on the purple count versus the area in which the decline in the triple Q stopped, again, old resistance, new support, that certainly is possibly another concept operating here. So right around the 335 level, we see that's very close to your count line and possibly the midline of the prior structure. So old levels still important. I think that shows it right there.
Beautiful. Love it. That's a great observation. Thank you for that. Now let's go to the vertical of this. And so we can see, because we can see now, this is through January 12th, and I will bring this more up to date with an NDX chart in a minute. But I'm showing you this because I've showed it to you before, and we were quite concerned about the overbought condition and the throw over. And then this is where we were, I think, potentially as of the last our last get together on power charting. But here's our sign of weakness, goes below the demand line here and then snaps back. Here's preliminary supply. And so on the triple Qs, and so we're right into the range of that. And so now we have a cause built. Well, let's look at that cause. And so we can see here in the case of the NDX, now I'm sorry, I'm putting the NDX up against the triple Qs, so that's a bit of a mixed metaphor, but they really are the same stocks and trading pretty much in the same way. And so here's our small count, which is this small area, which is this upthrusting action and a test, and then an outright failure. This count goes to 14,013.9. And then this count, the larger one, which is the rally up to the prior support area, now resistance, this counts down to 12.8 to 12.1. So this chart is not up to date. So that is what we need to do, is bring it up to date. But I just want to show you how this relates to the vertical chart that we were just looking at. And this is the area over here that we counted back in March to May, which was a reaccumulation, which we showed at the time. And this count goes up to and touches this climactic surge, which is a reaccumulation. This larger count goes up to 16.8, 17.5. 16.8 is missed by 1 box. So pretty darn good. And so that was a really, and also keep in mind that we saw overbought throwover conditions as it was running up into this count structure. So John, your thoughts?
Well, once again, very, very interesting on the P&F side. What a fantastic count there, all the way up on both the preliminary yellow count and then the green count. And I believe we hit the mark.
And also, John, you know, these are really like old school techniques. They've been around forever. We're using classic bar charts. We're using classic point figure. Point figure's been in use for hundreds of years. And the horizontal method, which has really largely been forgotten. Not many people do the horizontal. And this is the reason I like to really show it to our community and to anybody that's interested. I have so many friends that are telling me the great success they're having with point and figure. They're just doing that. I knew people in my earlier days that just did point and figure by hand on stocks and just traded off of that. They didn't do anything else. They didn't do vertical analysis or anything, but just did point and figure. And it's pretty darn remarkable. So here is that Nasdaq 100 vertical chart. And we lined it up with the bullish percent on the Nasdaq composite. We'll talk about that in a minute. But here you can see overbought. We drew the supply line first on this example. And the preliminary supply goes up and then has a very large reaction down to the oversold condition. And then the buying climax ensues. And so that goes to an overbought position, slight throw over, range bound. And so you can see slightly different structure, picture than the Qs, but a huge family resemblance. Now, then it goes sideways over into the bottom of the channel, and then down it goes into a sign of weakness. But the other thing that I want to point out, John, and something that I'd love for us to work on from a scanning perspective is the using breadth, bullish percent for breadth work. Now, this is all the NASDAQ composite stocks. Keep in mind, breadth is an unweighted indicator. Breadth is one stock, one vote, where here, we are seeing all the NASDAQ stocks cumulatively and whether they're on a bullish percent buy signal or not. And so we can see that at the point of the test of the buying climax and at the buying climax, we have a rally up to a lower high, but it's above 50%. And being above 50%, I think is a very important kind of magic number. It's the delineation line here. And so then as it goes sideways, attempts to rally up and test the buying climax here in late December, look how much lower the bullish percent is. There are fewer NASDAQ composite stocks participating in an upward trend on buy signals. John, your thoughts?
Fantastic. Fantastic. And if you look again, we see on the bar chart, right around the 13,814,000 level, if you visually go all the way back to April, May, you see we had a small distributional structure there that launched the down action to give us our lower anchor point on the oversold line. So we had distribution that established an area of resistance, then a failure, and look at where our current move is right down to that prior area of resistance. Right back to Edwards and McGee here. Old support, new resistance, so on and so forth. And we see it right on the chart.
Now here you can see the effects of the Meta Platforms Facebook drag on the NDX, which is one of the mega cap names. And then also I just want to point out, look for diverging characteristics. 2 strikes here against it. It's below the 50% level and it's making lower highs on an attempt to rally. And so, and all through here, you have a deteriorating internals. And here is the two areas of the point figure count I showed you on the prior point figure. So look what we did. We became climactic on the sell side here into this initial conservative point figure count that we took. Look how beautifully that worked, and produced a bounce up into the long-term 200-day moving average. And then look at the failure off the 200 with the meta platform weakness. And then here you can see the larger count down, which takes us down to the 12.8, 12.1 area right here. And so you can see these two counts at work. The first one here has been hit, and now the second one potentially could be in play. Classic place to go, because look at the prior support that was produced by this reaccumulation right here. So interesting place. And with that, that finishes sort of our discussion about the indexes. And we are going to turn our attention to looking at, oh, and then here, this is the Dow Jones 10-year decennial pattern. And we looked at this last time, so I'm not going to make really any comments about it, but just keeping in mind that the second year often produces an important low and an accumulation cause for a big move up for the rest of the decade. And so let's keep in mind the idea that there could be a wonderful setup in the second or the third year for a more important upward trend in the markets. And so even though we have near-term weakness, these are the conditions that can produce really wonderful long-term opportunities going forward. And with that, John, let's take a pause here so we can change screens and then look at meta platforms.
Awesome.
We are back. And here we're going to talk about meta platforms, Facebook, because it took a big hit today. And John, I really am interested in your thoughts on the stock. And I would like to start with this weekly chart, which is kind of my worldview for how I start looking at stocks and industry groups. Big promise to you all. Next week, we are going to immerse ourselves in industry group analysis, because we want to see what's working in uptrends, what's not working, what's in confirmed downtrends, how to use this analysis to identify best ideas by industry group analysis. And I think it's a super powerful method. Johni Scan and I are working on a project for how to do this that we really would like to share with you in 2022. So Johni, what do you think?
Well, if I didn't see it on the chart, I'd be shocked, but it's right there, because considering the amount of business my wife and I do on Marketplace, it's hard to believe that anything could drop that much, but it did.
Yeah, interesting. It's like that old saying, things move gently in their place and violently from place to place. And yes, the point is, and we'll talk about that, but when we look at the daily chart here in a minute, is the point literally is that there has to be some kind of a cause at work being built in for accumulation for a rise or distribution for a fall. And that if we have a discerning eye towards the conditions that create either, then that is the thing that can help us to be able to participate in good ideas, avoid the bad ideas, etc. And so let's keep that in mind, because that is the essence of the Wyckoff method. And so here you can see that, and I really just want to focus on the relative strength, because I think relative strength is important. In the case of this stock, basically the relative strength has been in an upward stride since 2019. And when it got above its long-term 39-week moving average, and turn the moving average up, this is the way I think about it, is confirmed by price, you now have the conditions for an ongoing uptrend. And this is the way that I look at industry groups also. Johnny and I are working on developing scans that will identify these characteristics. And so it's a work in progress right now, but we look forward to the day that we can share a well-conceived, nearly completed project. We never call them complete. But notice how even in the decline, the COVID decline, which was a sharp break for most stocks, it barely caused the relative strength to budge on Facebook in that decline. And then it got into a really nice uptrend and continued to go on. It produced some noise here because it went below the moving average, but look at what happened with price. Price built a reaccumulation, stayed above, generally above a rising 39-week, and continued on into its final high. And so you can see there that the final act was to develop a distribution, which we now can most assuredly call a distribution because of the subsequent drop, which is a very clear sign of the markdown phase. John, your thoughts?
Well, I think the tail of the tape is in the cascading failure of relative strength. We see it just really formed a structure that was somewhat divergent from price, really going back to the middle of 2020. We're basically horizontal to that entire period of time, and we've just broken through the bottom. And I think, if I recall correctly, one of the things you're working on, Professor, is structural analysis of the relative strength line itself.
Very good point, because this does look like distribution in here. And even here, where the trend never really did get violated on price, because of the nature of relative strength below its moving average, you want to tighten up your risk management. And that means snugging up stops, doing whatever it is that you do, reducing position sizes, et cetera. But because things can happen when you get below the relative strength long-term moving average. Things can happen. And so we want to always be super cautious. And here you can see that really since the beginning of September, this has been in a well-defined downtrend since the beginning of September, all the way down into this. Now, is this over yet? That's one of the questions that we're asking today. So let's take a look at that. Here is a daily chart, and this daily chart with relative strength daily against the S&P has a nice upward trending channel, buying climb. Look at the acceleration into a buying climax, preliminary supply. We can draw resistance here. It upthrusts that action and fails. Look at the failure. This failure after the upthrust is a very important period of weakness from the early September into the beginning of November. And so this is accompanied by an absolute breakdown of the relative strength. And when the relative strength is pointing down, price is pointing down, expect the trend has legs to continue. Now, we're building a cause in here that potentially could even lead all the way over to this area where there is a gap and a climax. So this is a very, very large structure, John. And also notice this very, very big trend channel that goes back 3 years or so, that it basically tries to hold with a series of signs of weakness along this important demand line until the outright failure, attempt to rally, does not get back to the demand line, and then just falls apart. Your thoughts?
Well, we should really create a Facebook page to cover this unfolding saga. This is just so interesting. We have structure after structure of massive failure and point and figure, Wyckoffian structural analysis. We'd have a lot of followers, I think, Professor.
A very good point. Thank you for that. I was just joking that I would certainly hate to get deplatformed. Anyway, just sorry, I would never expect that. So
No,
anyway,
because we don't deal in alternative facts.
no, exactly. Thank you for that. Now, wrong chart. Sorry, I got to go up. And here is the point and figure chart. I have not marked this up. I just pulled it up today. This is live as of this minute, down to 240. Oh my gosh. But what I did is I took account from this rally point. Look at all of these columns of X's from 296 up to 328. Heck of a rally. And this is the last point of supply, the last point of the rally where supply overwhelms and creates the downtrend. That's why they call it that, last point of supply. And we go over to this point here, right there, because this is where the trouble starts. This is a redistribution. We're not actually counting the whole enchilada. Notice how this high is only one by, no, it's exactly the same level, 328, as this point. Look at that, LPSY equals PSY. It's just magic, isn't it? and so now you have this symmetry, but because we are conservative here, we're taking the conservative count. And so the conservative count is 15 columns times 3 times 4, which is the scaling on a $300 stock. And that gives us a count down to, so 3 times 15 times 4. We take that number minus 352 and 328. That gives us a count range 172, 148. And so just so that you have that, so it's one, you can see my penmanship's not very good, 148. And so there you go. And so, which is lower. And there we are. And here, there's our count area right there, with the idea that we could take a bigger count, but I think it's premature to do that. Okay, and with that, John, your final thoughts.
Another great show, Professor. Thanks so much for having me on. Enjoyed every minute.
Well, and I always just greatly appreciate your thoughts. And keep in mind that next time we are going to talk about relative strength analysis and how to use this to dig in and find best ideas and weakening ideas like we just saw with meta platforms. And with that, I bid you farewell. Thank you so much for spending time with us today. And we will see you next time on Powercharting, with a huge big thank you to Dr. Johni Scan for contributing to this discussion, which I think is extremely helpful. So with that, I'll say so long. Thank you, John.
Bye-bye.